We see the markets now and see how it closed yesterday. It was a very positive close at the end of trading in Nigeria yesterday. Look at the numbers, and we see all share was up 1.28% at 168,030.18. Equity cap, that's the money, 107.861 trillion naira. There, of course, we see an improvement there. It was about 3 trillion naira that was added. I mean, 1.33 trillion naira that was added at the close of trade. Activity chart, however, was all red from volume to value and deals. They were all in the red, 694.79, value 20.57 billion, and deals 42,095. Top gainers, Dark Communication, Berger, and that's Julius Berger and FTG Insurance. Top losers were Red Starex, Deep Cap, and Numerate. Top trades, Charms, Universal Insurance, and First Wholesale. First Wholesale recovered and then saw a little bit of more profit taking, and then yesterday we saw it in the top trades. Well, following that, we've been seeing a lot of results coming in from the NGX, of course, from the corporate, and we'll be having that conversation with Mr. Odemezwe right here in the studio. But first, let's see the latest, and the latest is from Aradel. Aradel's results was released yesterday, and you can get it, of course, from the NGX website. So we see revenue for Aradex. We saw revenue up there, 20% change in the green. That's when you look at it from year to year. This is for December ended 31st, 2025. So we see from December 2025, we're 697.3, 20% higher than what you had in 2024. However, gross profit was in the red, EBITDA in the red, profit before tax in the red, and profit after tax, however, improved. There's a story right there. I hope Mr. Odemezwe will be able to explain that to us. When we see profit before tax in the red, however, profit after tax in the green. Volumes lifted, increased, and we know a lot of production. We had a lot of new rigs happened in Nigeria last year. The federal government has been very proud of that, and they've not kept quiet about it. Volumes lifted, we see, was 26% higher. Volume of refined products sold also went up 62%. However, average realized oil in the red, average realized gas price in the red. And also from this sector, the oil and gas sector, we saw O&O. O&O also, they have also released, we talked about that earlier, but I mean, just talk about the oil and gas sector. We saw, obviously, to follow the trend of what happened in Aradel, yeah? So we see profit after tax was up for, just like Aradel, O&O. Revenue also up, crude oil trading volumes changed, and we saw expanded expenditure increased. When the government say that we have more rigs, it's the private sector that's running it, right? So contract optimization initiatives are approximately 17.7 million across. And I know on the global scene, Ladi will give you more of the results later on during global news segment. But now let's bring in Mr. Odemezwe, Chief Consultant for Flaming Consultant. Thank you so much.
Academy and Consulting Limited.
Thank you so much.
Training company in Africa.
The foremost indeed. You'll pay for that advert.
Forgive me.
Okay, so I mean, it was a very active year for the oil and gas sector last year. And do we see that captured in the results? Let's see the Aradel, and then we'll see the, so we have it, revenue was up, and then gross profit was, however, in the red. This for Aradel.
Okay.
But
there are two figures for December here.
Yeah.
December 2024 and December 2024, so it's a bit confusing. Which one do we take here? You know, we're comparing 2024
and 2025, yes.
So let's take it that this is the real figure, you know, right? So you'll see that, like here, the red is a bit confusing.
Yeah.
This is the revenue, there's a
gross. So the revenue,
so
it's 581, 581.
The price of oil in 2025,
yes,
it was neither here nor there, you know, going up and down because of the events around the world, geopolitical risks and all of that. So, but you find most companies, depending on their productive capacity, you know, able to have increase in revenue. but the pricing wasn't quite exciting for most of them. And that's why you see, maybe that increase in revenue, but the changes, negative changes, in some of the lines, are not as impressive as should be in terms of growth in profitability.
Okay, let's see on. Okay.
All right. If you look at this, profit before tax, is lower here than it was here.
Yeah.
Apparently, even if revenue grew, the pricing wasn't fantastic for most of these companies.
That's what this tells us.
For Aradel, yes.
Let's see O&O and compare that. So O&O, we see there's profit after tax.
Okay, now, caution here.
Okay.
O&O is a different story altogether.
Oh, from Aradel.
2025 is their very first year of running effectively as a, big boy production and exploration company, following the acquisition of the NAOC, Nigerian Agri-Oil Company assets in 2024. So for them, 2025 was the first year, they had to, roll up their sleeves and get to work from acquisition activities or post-acquisition activities. O&O for the first time had to go into full activity, the usage of their assets. So moving from post-acquisition to asset delivery or, asset usage or utilization to begin to produce. When they moved in from acquisition, they have to begin to unbundle these assets, maintain them, put them up, change a few of the assets.
And I guess that's why we see that capital expenditure
fantastic,
increase.
And of course, even if you go to expenses, so they also spend a little more because they have to get new people, new ideas, and all of that. So that's a year for, sowing for them. Reaping will still come for the investors. Here, what they did was to make sure that these assets begin to work. Even some new well development program. Out of 36 wells, for example, they were able to start one, last year. You can imagine when the other 35 also coming. So what you see in O&O, based on their previous structure, focusing a lot more on trading, everything has just changed. So you see their revenue dropping. Why? Because they had to reclassify, they had to rebalance their balance sheet, moving away from, the narrow margin trading activity. Of course, you know that we have a player now who owns that sector. That's the PMS trading and so on. We have a refinery in Nigeria now that tries to provide almost the whole requirement of gasoline and PMS in Nigeria. So O&O is just trying to now strategically move away from that area where the margins are now turning out, and a player now has a bigger advantage than others in that market. So they are now moving their balance sheet more into the new acquired, activity in oil and gas.
Because we see that the report is that major indigenous players saw substantial gains because obviously the government cleared 28 new oil field development plans worth 18.2 billion, and for Aradel and O&O, profits grew by about 10% to 241 and all of that. So
so that's the point I was making, that for O&O you will see heavy drop in their revenue because they stopped focusing on oil trading and then ramped up their production. If you look at their production, total production capacity increased by 32%. They produce much more oil, about 32,000. That's net to them. It's a joint venture, a barrel of oil equivalent per day. That's a massive growth. And then even gas production also grew by about 24%. And then the natural gas liquids, was almost insignificant, but now it's grown by almost 700%. So now you can see that the shift is from oil trading, that's downstream activity, to upstream.
So we can expect more of that.
Now, as the balance sheet now consolidates in this, upstream activity, you will begin to see real, value creation in their assets. And the revenue will now reflect a company that's now divested, or moved or rebalanced from trading to upstream activity. And of course, the margins there, we hope, are going to get better, depending on what oil price, even though the company has taken a position to, do what we call hedging prices at $59 per barrel. So that no matter how low oil price goes, they are sure of having deals above $59 per barrel. So at the end of the day, depending on how the oil price goes, O&O has now kept, put all the assets ready for activity, in 2026 going forward. So you will see all of that in the way they have restructured their balance sheet, spent so much money to put things in order, and then now we're waiting for action to start. So 2025 was a clean up year, and even the drop in the revenue is not out of distress It's a strategic
because
decision
of
by management.
reinvestment.
Yes, to
so what
move
can
to where they have more
investors
money.
actually expect from this sector this year? We know, I mean, even before you came on, we talked about the global oil, what's happening, the meeting between the U.S. and Iran, and how that's moving. Exactly.
Shooting down the drone and all of that.
Exactly.
I think the U.S. president has tried very carefully to avoid any escalation with Iran again. So it won't be like too much trouble to one nation, in almost less than a year. So he has tried to avoid, he had promised to shoot, as they were shooting the protesters, that he was going to be shooting them too, but we saw that die down. And the protest is also somehow abated.
It's not in the front of a lot of news anymore.
Yes, it's going down a bit, and that's also all these diplomatic discussions to see how killings will stop. You don't go and take people who are protesting and kill them, hang them, that they're committing felony or whatever. So, but then, as they are doing the diplomatic discussions, you also saw U.S. Massive army military assets moving close to to Iran. They are positioning all the U.S. positions around the Arabian nations. So, but with that, Iran also started flaring up. We don't like, even though you've said we are going to discuss, but we don't like the way you're positioning your assets around us. We are scared about it, and then they took action.
And all of this bring uncertainty.
Yeah, and the market does not like uncertainty.
Obviously.
So you will see that would have made the oil price start going up, which could be to the advantage of Nigerian oil and gas companies. Usually, whenever global oil price, inches up, Nigerian companies gain a lot, and particularly the indigenous companies like O&O and Aradel and the rest of them, is good news for them, even though it has other impacts to all of us, in the way we buy, pump price of petroleum. So, but we are watching what's going to happen in a few days. Remember that Venezuela is also on the board. Russia oil is still not flowing, even though there's also a discussion going on now between Russia and U.S. and Kyiv, Ukraine. If that happens too, it has a downward pressure on oil price, because Russia will begin to flow out, all the sanctions will be lifted. So there are mixed feelings. Right from last year till this year, there are varied feelings around production quantity, around demand for oil, around
So what
prices.
does this do to an indigenous company like,
for an indigenous
especially
company
when you say they have placed,
Yeah, they have positioned themselves for better production, so they will have to wait and see how prices will affect while they produce enough, which is good, and Nigeria is also not doing badly with OPEC quota that we have. So we have
even though we have not hit it.
We haven't hit it, but we're saying that production is not suffering in Nigeria. We have the capacity to produce. The likes of O&O are producing more, rather than the rest of them. So the point is that productivity is not a problem now. The assets are now efficiently utilized, like O&O and other players. Now, the only concern is, will prices be stable for them to be able to plan their expenses and all of that and end up with positive figures at the end of the year. So nobody can predict that.
So we had a good record when it comes to oil thefts and vandalism last year.
It's been dealt with, mostly.
To a large extent.
Even though if you look at the expenses, you find that they have spent so much now in securing. They had one or two incidences last year, which were immediately arrested. Being a home boy, being a home company, they know where these things happen. And they were able to quickly resolve that issue. That was around October or so. They were able to deal with that, and they started production immediately. So we don't expect that theft will be much of a problem for our oil explorers in Nigeria, particularly the home people. Rwanda is the leading indigenous integrated oil and gas company. And with the advantage they have, we don't see theft being a concern. It's being dealt with, but it's still a factor.
Yeah.
All right?
So what can investors expect this year? Now, they've released their results. It's not looking as good as would have wanted it because of the divestment.
Oil and gas has remained a mainstay of our economy. All right, so investors will not always have much to fear in investing in that sector, particularly when there is operational efficiency, when companies are investing properly in human capital and engineering equipment. So it will always be a place to invest in, and a profitable business, by the way. The only major risk, I must emphasize again, is global oil price games going on. So can we estimate, for example, that Russia and Ukraine will be resolved this year? If we do, it's not such a very wonderful news for our producers. Can we also estimate that the Iran-US tension will also, abate? It's also not a fantastic news. However, there are other factors that affect oil prices, global demand and all of that, and even the U.S. position, whether U.S. is going to end up this year also a net exporter or net importer. These factors are all very important. And of course, other decisions, central bank decisions, Bank of England is going to do interest rate announcement this afternoon. U.S. Federal Reserve is also trying to, even though inflation is now largely reined in around the world, but those concerns still exist. And as productivity begins to climb up, even with Ukraine, Russia being resolved, we may see bigger level of demand at the same time. So this may balance, and we'll see prices still hovering around $60 to $70 per barrel, which if it happens, I expect the Nigerian producers will record a very good year in 2026.
What about the Nigerian government? When we put it against the benchmark for the year?
It means that our budget, we should be able to roll something close to our budget. We always, like last year, I think we budgeted about 75.
Yeah.
And you see where it's trading right now. So it's not such a very wonderful news. And that made our currency not perform so wonderful. But now it is strengthening based on the happenings in the global oil market right now.
So, but why does it seem like the government intentionally overprices our benchmark? Is it a deliberate economic...
It's being optimistic. Nigeria has...
Overly optimistic?
We are trying to avoid a very large deficit in our budget. We always want to pray, that miracle will happen and oil price stays very high. But I think it's a major risk to our balance sheet as a country. It's a major risk to our budget, annual budget estimations. So, but we have to, come back to the table and think of how do we diversify Nigeria's economy from dependence on oil? How do we ramp up non-oil production so that whatever the oil price is, we won't lose headache over it? We always budget that, that the price will be 75 or so. They're hanging on to it because if you don't do that, our revenue will be so abysmally poor compared to our global budget. Total spend, capital and recurrent expenditure.
All right.
So you just hope. Budget is hope. Sometimes it's
hopeful
hope
revenue
against
and
hope.
Hopeful expenses.
All
right. Thank you so much, Mr. Davis, for your time and helping us to understand in between the numbers.
All right. Thank you for inviting me.